Good morning, everyone. Thank you for joining us for this town hall discussion. My name is Tanisha Nungary, and I am the president of the African American Chamber of Commerce of Central Florida. We're happy to host this town hall discussion along with Dr. Idler Berhome, who is the president of the Haitian American Chamber of Commerce of Central Florida. And this town hall discussion is sponsored by our community partners, the University of Central Florida. We're happy to have with us two very special guests. First, we have our senior senator from the state of Florida, Senator Marco Rubio, who's been working hard on behalf of the Florida constituents, as well as Florida House Representative, Representative Kamia Brown, representing District 45 here in Orlando, who is also a member of the African American Chamber of Commerce Board of Directors. So we're happy to have them both with us to just kind of talk about the status of what's going on with PPP. We know a lot of our members here have applied unsuccessfully, and there's more money that could be coming down the pipeline, and it may be voted on just in the next few hours. And we want to make sure that those of you who are in attendance here have the information to move forward as quickly as possible, because these funds could be tapped out. So without further ado, I'd like to turn it over to Senator Rubio and Representative Brown just to give us a brief update, and then we'll turn it over back and we'll have some questions.
Okay, let's let Representative Brown go first.
Thank you, Senator Rubio, and good morning, everyone. This is Representative Kamia Brown, located here in Ocoee, in the comfort of my home, but definitely want to thank everybody for getting on the call or on this webinar, participating in the town hall this morning. Have a quick update just with kind of what the state is looking at and doing. As we've heard and we've seen on the news daily, the various issues relating to DEO's necessary upgrades and enhancements that are needed. And over the weekend, there were some updates and some maintenance that was provided with our Connect program. And our Connect program deals with DEO's unemployment and reemployment assistance program. As we know, we've had several issues with people getting on, also just the compatibility with mobile devices. And so we have made those changes. As you know, there is an app that is available for people to go and apply with. The website is now compliant with more of the upgraded web Firefoxes and Internet Explorers. And so our web and compatible with tablets as well as phones for you to apply. Currently, there is the red tape that folks have been having as it relates to the holdup as to why many folks haven't been getting their checks. That Governor DeSantis has now moved in the direction of waiving that red tape. And so now with working with the U.S. Department of Labor, we've identified some burdens, regulatory burdens that can be waived so that claims are able to be paid out quicker. And also there's been the suspension by Governor DeSantis of the biweekly reporting, which some folks, not only those that have applied during COVID, but also those prior to COVID, were facing and unable to get assistance with reporting that information. And so we have waived those rules. There is no need to re-log in biweekly to report anything. Those checks will automatically come. There have been some nightly maintenance that have been conducted for the system to kind of help process the claims. But with that maintenance that DEO is currently doing, it still allows folks to still file new claims 24 hours a day. So just, of course, bear with us. I know we talked about it on our last town hall, but slow progress is being made, but hopefully soon we'll be able to get some checks in many of our Floridians' hands.
Okay. It's my turn. Thank you for putting this together, Representative. I appreciate it very much. And so just to update everybody about 5 p.m. today, 5:30, the U.S. House of Representatives should be approving another $310 billion for the Paycheck Protection Program. And my sense is that the president will sign it right away. And so it should be operational tonight or early tomorrow morning. If I could take you back about 5 weeks, when we drafted it, the goal was, what we could see was a looming unemployment crisis. And we wanted to get money into the hands of mid-sized firms and smaller firms as quickly as possible. We were told that there's all kinds of things that were going to be out there for other businesses like airlines and so forth. But there really is no easy mechanism to get money to 50% of the U.S. economy, which is small business. It's not like the IRS can send checks to people's homes or whatever. There's just no easy mechanism. So what we did is we built it on the existing SBA 7A program, which had 1,800 delegated lenders. And then we wrote it so that new lenders could come online and become a part of it. And that's continued to grow. We're over 5,000 individual lenders that now participate or are eligible to participate in the program. And that continues to grow, and it'll expand even more in the hours and days to come. Obviously, the program was put together very quickly. They launched it in 7 days, which is extraordinary for something of this size. In 11 days, they made over 1.6 million of these forgivable loans. The average loan is about $206,000. About 74% of them are under $150,000, which means because the loan is built on 250% of your payroll, if it's under $150,000, it means companies with payroll of less than $60,000 a month. It's not without glitches. The initial glitches were all technical. The website was overwhelmed. People didn't know what papers to use and so forth. That got better every single day. There'll probably still be issues with regards to a lot of that, but it's certainly better than it was when it started. And then obviously the other issue we've learned is, a lot of bigger companies have figured out how to work it so that they can get multiple loans. That was never the intent. So I think that is also going to be addressed. It's my understanding that as of this morning, at least, over $200 million of loans have been returned by some of these companies, which was a wise thing because they signed a certification that could have gotten them into some trouble had they not returned it. So that's all positive. So I want to be brutally honest about what happens next. What's happened now is that because we have 5,000 lenders who now have experience using this program and are sitting on about 1 million applications that are ready to go, I think 2 things are going to happen. 3 things are going to happen. One is the first couple of days are going to be rough with a portal because it's going to get overwhelmed again and slammed, but it should work better, especially since the lenders now know how to do this. Number 2 is that we're going to see another 2 million or more small businesses get access to these forgivable loans, which is going to help save jobs. The first round, by some estimates, will allow the payroll of over 30 million workers to get covered. Obviously, and so something similar to that or more. And the third thing that everybody should be prepared for is this money is going to fly a lot faster than the first round because there's now 5,000 lenders who know how to use it, and the applications are ready to go. A couple things that'll help in that regard is Treasury. We've been working with Treasury on new rules, additional rules that sort of clarify what kind of businesses they're trying to help here and which ones they're not. And so that should help a little bit. And the other is, and this is something I've been asking for since April 7th, there's, in addition to the 250 billion of guarantees that's available to all lenders, there's 60 billion that is on top of the 250 that can only be used by lenders with $10 billion of assets or less. That basically means credit unions, smaller regional banks who have done phenomenal, by the way. These community banks have been saviors in this thing. I mean, they've done 70% of the loans, but they were faster, quicker, easier. And as everyone knows, community banks, I'm not here to beat up on all the bigger banks, but the community banks are really the ones that hustle for their small business customers because that's the core of their business. And so that set aside is there. It'll also include community finance development institutions, CFDIs. We have a number of them in Florida. We have a few that are already qualified under SBA, and we're pushing to open up even more because I think that's going to be critical to reach all sorts of underserved communities and also, independent contractors and who qualify for PPP. 1099 workers can now get this based on 2.5 months of their income. And also it'll help C3s, which is a lot of community groups who would desperately need this to stay afloat, even as they're out there trying to help people. So Look, this is not without challenges. I will say one thing, despite its challenges, it's my view that it's been the most successful part of the CARES Act. I mean, before people got a check from the IRS, before they've been even able to, before airlines got their money, before any of this other stuff happened, there were companies that were getting money deposited. The last 2 points I want to make, because I want to get to the questions. A lot of people, there are 2 common questions that I'm getting, or 2 common things that we're hearing. Number one is people that say, I applied, I was approved, and I haven't gotten the money yet. So understand, the money doesn't come from the government. You're not waiting for Washington to send a check. The money comes out of the cash of the lender. So they forward the cash out of their deposits. Then it's like any loan. They forward the cash out of their deposits. And then in about 6 or 7 weeks, they can keep the loan and service it themselves, or they can take it to the discount window at the Fed and sell the loan. And what the federal money is a guarantee. It's a guarantee that if you borrow $100,000 and it turns into a loan, which for most people it won't. I mean, if you're spending it on payroll, rent, and overhead, it's not going to be a loan. It'll be forgivable. But to the extent it becomes a loan, that's just a federal guarantee that that money is going to get paid by someone. Either if you don't pay what you owe as part of it as a loan, then the government will. So you're not waiting for government cash. It's just up to the bank to disperse now. They have 10 days to disperse from the date of approval. So I'm hoping that people start seeing money. And every day I get a report, somebody got their money, which is good. That should speed up. And then the other are people that say, I applied, but I didn't hear back. And I think the likeliest thing that happened there is you applied, but before they could submit your approval, the SBA shut off the portal. Once they hit the guarantee cap, they stopped doing new ones. And so it's possible you got caught there. And so now what happens is, theoretically, when this reopens, the lender will file for it and you'll get in this time. And then 10 days later, you should get your money or less. And the last point on both of those is it is very lender dependent, okay? Like anything in life, like any business in life, some lenders are better at this than others. Some lenders move faster. There was a story last night in the Washington Post about a small bank in Nebraska, and they had their workers and tellers and everybody else working on nights and weekends from home to process these things. Some of the bigger banks didn't open up until much later in the process. I mean, it took 9 days, 8 days to open up their process. So a lot of this is lender dependent, but there was really no other way to do it. If the government tried to do this directly, we'd all still be talking about, when is this going to start? Because so that's that. So that's the update on it. Good news, challenges like anything else, but we're working hard on it, and hopefully we can get as many people covered as possible.
Thank you both for those updates. And Senator, I think you touched on a lot of the questions that we've received. One in particular asked that she applied for the EIDL loan on April 3rd, but hasn't heard anything and wants to know if you have any update on what's going on with that.
Yep, EIDL is the emergency loan. And so let me say a couple things. One of the reasons why we created PPP is because we knew EIDL would have problems. That is a loan that is set up for like a hurricane. And even there, it's been a challenge. It's a hurricane that happens in a geographic area. SBA comes down, it sets up some tents and a portal, and it helps process it. And even there, they've had problems. It is not set up for a national catastrophe, which is what we're facing here. The other is it ran out of money. And I think it's got like 300 billion in requests. In this new bill, they're going to get another 60 billion, which will help push more of these loans out. And so hopefully more of those are going to be dispersed. That is handled directly by SBA. But again, understand that the demand there is way above the supply. And that's why, again, we had a lot of pressure to get this PPP program to work, which is not a loan. If you use it for payroll, it's forgivable. Honestly, for a lot of people, what they're trying to do, and it's smart, is use them both. You use PPP to pay your workers and EIDL to kind of cover your overhead and some of the costs you might have in terms of paying suppliers and things like that, depending on what business you're in. So there's more money for EIDL, and that should loosen up some of it. But yeah, that program has challenges. I mean, it's run directly by SBA, and it's got, I think, 300 billion of requests. They put in another 60 billion to help move some of these forward.
Okay, all right. And then another question, you've already touched on this a little bit, but if a business applied for PPP and didn't receive anything, should they reapply again?
No, again, I'd check with your lender, but if you filled out an application and didn't hear back or hear anything from them, the likeliest thing that happened was that by the time they got to your application and tried to file it, SBA had shut down the portal, because once they hit the guarantee cap, they couldn't do anymore. And that was like a week ago today. So I still think you should check back with your lender to make sure that they have it and that they intend to move forward on it. And again, I'm not here to be like, I'm not telling you that there are, the big banks, the people there work really hard and they're trying and so forth. But it's been my experience that the regional and community banks have been more responsive. And that's the case before. That's why, and that's what they specialize in. So I would also tell you that, you're allowed to apply through multiple lenders. You're not allowed to get multiple loans, but you're allowed to apply through multiple lenders. And so I'd keep an eye out there now, because there's a lot coming on. There's PayPal's now in this business. There's community finance development organizations that are now going to be able to get in, credit unions. And there are many regional banks that, even if you don't have an account with them, will do it for you if you open an account. Can I touch on that real quick? A lot of people talk about how banks are only going to help those who have an account with them. I'm not defending them. I'm explaining to you why they made that decision. There's a law, the Banking Secrecy Act, and what it says is you have to know who your customer is. So when you open an account, they want to make sure you're not a drug dealer, a money launderer, a drug trafficker, all this sort of thing. They have to know who you are. And so if you already have an account with them, they've already done all that paperwork. So it saves them a lot of time and effort. It's a lot easier to lend to you. If you don't have an account with them, then they got to go through all that with you. And that becomes problematic in some cases. So that's why they've given priority. What's not in the law is that we're only going to lend to you if you already have a credit card or a loan with us. That's something Bank of America put in there that wasn't a part of it. They walked away from it. And then the other issue we've seen is, banks like JP Morgan, I'm glad they're doing it and so forth, but that they're in the program, but they allowed sort of the bigger businesses to apply through the commercial sector and everybody else through the small business. Well, they have 90% of their loans were through the small business sector and the business banking, and 10% were through the commercial sector. The commercial sector loans moved a lot faster. The government, the government doesn't pick which loans to process when. It takes them as they come in. So again, a lot of it is lender dependent.
Okay, and then another question we received was, if we applied for EIDL and later for PPP, can we get both?
Yes, you can. They're not mutually exclusive. You can get both.
Okay. Let's see what else. Of course, you've heard a lot last week about some of the large established businesses like Shake Shack and Ruth Chris receiving the loans, and many of them did return it. What has been put into place this time to make sure maybe a certain amount really does go to small businesses and those types of things that does not happen again?
Yeah, well, the first thing we learned early on was that the smaller businesses did disproportionately better with the smaller bankers. So that's why, we set aside $60 billion in addition to the 250 that can only be used by those institutions. That should help a little bit. The second is we've asked Treasury, when you pass a law, and the representative will know this as well, Representative Brown knows this as well, we pass laws, but then the laws have to be applied, they have to be operationalized, and that's done through rulemaking. So these agencies write rules. So Treasury writes rules, and sometimes the rules don't exactly reflect the legislative intent. And when you're doing it in a hurry, sometimes you make mistakes. So Treasury is going to issue new rules that make very clear, who qualifies and who doesn't. Now, on that sense, I want to separate two different things. A lot of people say, well, Wendy's or McDonald's got it. I have to understand there's no loophole for Wendy's or McDonald's. A Wendy's franchisee already qualifies under existing law because they're owned. It may say McDonald's on the sign, but McDonald's doesn't own that store. It's someone that maybe 20 years ago was a manager at a McDonald's who saved enough money and actually bought one and maybe two. Those are independent businesses. And so it may say McDonald's, but that's who's benefiting. And all we tried to do is say, well, that should also apply to other chain restaurants that are independently owned and hotels, because we all know the story of a family who bought a hotel and it says Holiday Inn or Hilton on it, but it's not owned by Hilton. It's owned by that family. It just that's the flag on the hotel. That's who we were trying to help. What has happened, unfortunately, in some of the ways that it's been interpreted, is it's allowed the companies to apply through multiple subsidiaries and get not one $10 million, but several. And so, look, the goal of this program is to pay employees. And so ultimately, the more money is being loaned, the more payrolls are being covered. but we really wanted to prioritize those who were independently owned when it came to that. And the reason why there's an exception for restaurants and hotels is they're about 66% of the unemployment claims are coming out of that sector, particularly food service. 66% of the unemployment claims as of the first few weeks were out of that sector. 46% of the workers in the food service, full service sector of food service work for some chain of some kind. We're talking about, the college student that is a waitress or a waiter at one of these places, or the kids that are taking your order in line at one of these businesses. And so we wanted to be able to reach them, and because ultimately it's for the workers, but we tried to make some changes to prioritize the smaller operators.
Every right to regulate the upside. So capitalism has changed. Second, the country is moving slowly to the left.
We have someone that
Taxes have to go up. Quickly,
yeah, someone's got TV on. They need to mute it, right?
Taxes have to go up. So things like carried interest, capital gains taxes,
everything is on mute. Everyone is on mute before we turn it over to Representative Brown, who has a question.
And for the good, by the way. Okay. Also, I've indicated in the past,
If we can get every phone, I'm not sure where the television is
not be viewed positively. You have negative interest rates in Japan. You have negative interest rates in Europe.
Senator, so my question is, on the last allotment, the 350 billion was gone after 3 years. With this next trend that it could come and run out quickly, are there any other proposals that may come down the pipe next, if anything?
I think I heard your question, and I hope you guys can hear me. That TV seems to be getting louder, but anyway, there we go, perfect. I think your question was, is anything that's done? Yeah, there is. Look, we're not done with this. There's going to be a lot of work to be done. And I tell a lot of people, look, in my party, obviously I'm a Republican. A lot of people are worried about the debt and government spending. I am too. That we all are. This is borrowed money in many ways, and so we're concerned about it. But the way to think about this is like eminent domain. Okay, we have taken people's businesses and jobs, and we have said you can't work and you can't open because of a public need. But when eminent domain, if you take someone's property, you have the right. Government can take your property because they want to build a road or make a park out of it, but they got to pay you for it. And so for me, that's the way I analyze this: is we have shut down the economy, and if government's going to shut down the economy, it has to compensate people for it, especially if we want them to continue to comply. So I think we're going to have to do more. I think really the challenge is not whether we're going to do more. The question is going to be, how do we do more? Washington, D.C. right now is having a surge in cases. They're kind of at the beginnings of something like what New York faced. So the city itself is already shut down. So you're trying to bring 535 people from all over the country, including Alaska and Hawaii. You got to fly them in. You got to meet. You got to have staff around. So the concern becomes, how does Congress even vote on things? And right now, the only way we can pass anything is through unanimous consent. In essence, in the Senate, every single senator has to agree. And we've been fortunate that we were able to do that once. I'm not sure how much longer we're going to be able to do that before we're going to have to go up there and vote in person. So as far as what those ideas include, I think there's probably going to be additional. We're still in the middle of the storm here, so there's probably additional things we're going to have to do for cities and counties and localities that are being badly hurt by this. The last thing we want to see is mass layoffs at the city and county level at a time when those employees are critical to the response. And then long term, there's going to be a series of things we're going to have to do to recover. So for all of us, we're very familiar with storms, right? In the middle of the storm, and right before, you're doing everything you can just to make sure the roof doesn't fly off your home and that you're safe while it's happening. But after the storm is when you take an assessment of the damage and begin to respond to it. So we're going to be dealing with this not for months or weeks, for years. I mean, the damage is still being done, and we still don't know the full extent of it, because even if there's some reopening soon, it won't be like, it's not going to go right back to the way it was. It's going to take some time. It just is.
Okay, and I have two last questions, but I'll ask them together so that you can, because I know we're running out of time. So one deals with sort of the likeliness of any additional federal subsidies that will be provided for employers. Will there be any? And then also, I guess in the last stimulus bill, there was the employee retention tax credit. And I'm not sure if you can sort of expound on that, whether or not it's still available, and If so, to whom is that available to? And sort of how does that work?
Yeah, let me take the second one first. So in addition to PPP and these sorts of things, obviously you have to have revenue in order to even have a tax return, but you'll be able, whatever you spent on retaining and keeping your employees, you'll be able to knock that off of whatever your corporate or business tax liability is for the given year. In addition, by the way, employers are going to have to pay are not going to have to forward the employee portion of FICA during this period of time, which is also helpful, right? Because I mean, it makes that money that for payroll go further. As far as whether there's going to be additional help to employers, I think the answer is going to have to be yes. And here's why. PPP covers on average about 6 weeks of payroll or 6 to 8 weeks. And we're already 5 weeks into this. And even if you got it today and you push it out, and I mean, there are still going to be people struggling to keep payroll going into June and July and August and so forth. So I do think we're going to have to revisit it. The issue is not whether we want to continue to provide help. I think the issue is what's the mechanism you use to get people help, because it's one thing is to say I'm going to put a check in the mail and send it to every American, and even that's come with complications. Another is how do you reach 90% of the companies in the United States who employ 50% of the workers in this country. And that's a lot harder. These are a lot of small businesses that range from a one-person operation somewhere to some small business with 150 people in 3 locations. So that's really been the biggest challenge. Is there's no easy way to do that, and that's why we created this program. So whether it's this mechanism or some adjustment to it, I still think that if we want businesses to be able to weather the storm here, it's not just going to be over the next 6 to 8 weeks. I mean, this is still going to take some time. Even if tomorrow they said restaurants can open, okay, there's no guarantee customers are going to come. A, because they're scared of getting the virus, or B, because they have no money to spend anyway because they've been unemployed for 6 weeks. So there's going to be some real challenges that it's not just going to go back to normal overnight. And frankly, for some businesses, it's going to be very, very difficult, because they're in a sector that people aren't ready to spend in, and so we have some real big challenges ahead of us. No one's ever faced anything like it. We're just gonna have to do the best we can and keep hope and keep plugging away on it. But yes, we're gonna have to do more. There's no doubt.
Before we only have a few more minutes, and there are a lot of questions that are coming through, and even I just received one from a member, Lena Graham Morris, said that they have received funding. So that's wonderful to hear. We'll email all those questions to both of you and get those answers. But before we close out, I want to give Dr. Bahom a chance to ask a few questions that he may have from his chamber members.
Sure. Yep. Thank you, Tanisha. Thank you, Representative Brown and Senator Rubio. This is Dr. Lebanon with the Greater Haitian American Chamber of Commerce. On a positive note as well, one of our members have also received their EIDL and also the PP3 loan as well. You mentioned some of the organizations that were included with the nonprofits. In regards to the CIS-6, those that are classified as CIS-6, are there any provisions that they may be considered as well, like the chambers, that may be able to help or at least flow some of the funds or possibly assist some of their members? And secondary, in terms of college students, many of those are from underserved communities that may still be affected. Are there any provision that they might be able to participate within these stimulus packages as well?
Yeah, on the first one, we've heard a lot from C6s. They weren't included in the first bill because there's a lot of them, and it's just a money issue. The more people we include, the more money we have to come up with it. We've heard a lot from it, and I do think it's a topic worth discussing, whether it's through PPP or something else. I think a lot of C6s are going to be critical in the recovery phase, and we should consider. I think that will be discussed. I don't know if it'll be through PPP or something else, but just in terms of helping the country recover, a lot of C6s, particularly the smaller chambers and even the bigger ones, are going to play a key role in helping their members connect with resources and recovery resources. As far as students are concerned, look, I think there's a broader conversation that needs to be had about an entire generation of young Americans, 18 to 25, graduating from high school and not sure they can even start college in the fall, graduating from college, into an economy in which jobs are being lost, not created. So I think we have to have a broader conversation about that. In terms of more specifically for students, there is funding available to universities across the country, and the provision is that 50% of the money these schools are getting has to go directly to students, be it through housing assistance or other provisions that become available to them. And that's something that we've watched very closely and have been discussing about how schools intend to implement it. I think the Florida schools have some pretty good ideas about how they intend to use that money, including people in student housing, or even people who need housing assistance, because they need to be able to pay rent, even though there may not be classes available for them to attend, or they're doing it online, but they have a lease that they have to fulfill. So 50% of the federal money to universities, which numbers in the billions, has to be directly to assist students. But I think we need to do more, and it's something we started thinking about for that entire subset of 18 to 25-year-olds who are graduating college and entering a non-existent workforce, or leaving high school and supposed to be going to school and now aren't sure what that's going to be all about.
Thank you.
With that, I think we're out of time. I have exactly 10:30. So thank you so much again, Senator Rubio. Thank you, Representative Brown, both for joining us today. Again, we do have questions. We will send them over to both of your offices so that we can get answers and make sure that we get back to all of those who sent questions in. Thank you everyone for joining us, and we ask that you please, if you have any other questions, to email us at info@blackcommerce.org, and have a good rest of the day. Bye-bye.